Welcome to our journey into the world of resource allocation and capital budgeting. In today's fast-paced business environment, making the most out of your financial and human capital is more important than ever. Whether you're a manager, entrepreneur, or team leader, understanding how to strategically allocate resources can be the difference between success and stagnation. Over the next several scenes, we'll break down the essentials, explore practical examples, and provide actionable tips to help you master these critical skills. Let's start by defining what resource allocation really means and why it's at the heart of every high-impact initiative. Resource allocation is the process of distributing available resources, like money, people, and time, across various projects or departments. It's about making smart decisions to ensure that every dollar and every hour is used where it can have the greatest impact. This process requires a clear understanding of your organization's goals and the potential return on investment for each initiative. By carefully considering where to direct your resources, you can drive growth, improve efficiency, and support innovation. Let's look at the key components that make up effective resource allocation. Capital budgeting is a systematic approach to evaluating and selecting long-term investments. This process helps organizations decide which projects or assets are worth funding based on their potential to generate future value. Capital budgeting involves forecasting cash flows, assessing risks, and comparing expected returns. By using tools like net present value (NPV) and internal rate of return (IRR), decision-makers can prioritize investments that align with strategic objectives. Now let's explore why capital budgeting is essential for sustainable growth. Effective resource allocation ensures that your organization's most valuable assets are focused on the highest priority initiatives. When resources are spread too thin or misdirected, projects can stall and opportunities may be missed. By aligning resource allocation with strategic goals, you create a roadmap for success that maximizes impact and minimizes waste. This approach not only boosts productivity but also enhances employee engagement, as teams see their efforts contributing to meaningful outcomes. Next, we'll discuss the challenges organizations face in resource allocation. Organizations often struggle with resource allocation due to limited budgets, competing priorities, and unpredictable market conditions. It's easy to fall into the trap of spreading resources too thin or investing in projects that don't deliver results. Other challenges include lack of transparency, poor communication, and resistance to change. Recognizing these obstacles is the first step toward overcoming them. In the following scenes, we'll look at strategies to address these challenges and make smarter allocation decisions. Foundation of effective resource allocation is setting clear, measurable objectives. When everyone understands the organization's goals, it becomes easier to prioritize initiatives and allocate resources accordingly. Objectives should be specific, achievable, and aligned with the overall strategy. Regularly reviewing and updating these goals ensures that resources remain focused on what matters most. Up next, we'll discuss how to assess your available resources. Before making allocation decisions, it's crucial to assess what resources you have at your disposal. This includes financial capital, human talent, technology, and time. Conducting a thorough inventory helps identify strengths and gaps, ensuring that resources are deployed where they can have the greatest impact. Accurate assessment also prevents overcommitment and supports realistic planning. Let's move on to the importance of prioritizing initiatives. Not all projects are created equal. Prioritizing initiatives means evaluating each opportunity based on its potential return, alignment with strategic goals, and resource requirements. This process often involves tough choices, but it ensures that the most promising projects receive the support they need. Tools like scoring models and decision matrices can help make these decisions more objective. Next, we'll look at how to allocate financial capital effectively. Financial capital is often the most visible resource, but it's also limited. Allocating funds wisely requires a deep understanding of project costs, expected returns, and risk factors. Capital budgeting techniques like NPV and IRR provide a structured way to compare investment options. By focusing on projects with the highest potential value, organizations can maximize their financial impact. Now, let's turn our attention to managing human capital. Human capital, your people, is just as important as financial resources. Effective allocation means matching the right talent to the right tasks, ensuring that skills and experience are fully leveraged. It also involves balancing workloads and providing opportunities for growth. By investing in training and development, organizations can build a more adaptable and motivated workforce. Next, we'll explore the role of technology in resource allocation. Technology plays a crucial role in modern resource allocation. From project management software to data analytics tools, technology helps organizations track resources, monitor progress, and make informed decisions. Automation can also free up human capital for higher value work. By embracing digital solutions, companies can boost efficiency and stay competitive. Let's now discuss how to monitor and adjust allocations over time. Resource allocation isn't a one-time event, it's an ongoing process. Regularly monitoring how resources are used allows organizations to spot issues early and make necessary adjustments. Key performance indicators, KPIs, and dashboards provide real-time insights into resource utilization and project progress. This proactive approach helps ensure that resources continue to support high-impact initiatives. Next, we'll look at the importance of flexibility in allocation. Business environments are constantly changing, and so are resource needs. Flexibility is key to effective allocation. This means being willing to reallocate resources as priorities shift or new opportunities arise. Agile organizations regularly review their allocations and aren't afraid to make changes when necessary. By staying adaptable, you can respond quickly to challenges and capitalize on emerging trends. Let's move on to the role of leadership in resource allocation. Strong leadership is essential for successful resource allocation. Leaders set the vision, communicate priorities, and make tough decisions about where to invest. They also foster a culture of accountability and transparency, ensuring that everyone understands how and why resources are allocated. A leading by example, managers can inspire their teams to focus on high-impact work. Next, we'll discuss the importance of communication in the allocation process. Clear communication is vital for aligning teams and ensuring that everyone is on the same page. This includes sharing the rationale behind allocation decisions and providing regular updates on progress. Open communication channels also encourage feedback and help identify potential issues early. When everyone understands the why behind resource allocation, they're more likely to stay engaged and committed. Let's now look at how to balance short-term needs with long-term goals. Resource allocation often involves balancing immediate needs with long-term objectives. While it's important to address urgent issues, investing in future growth is equally critical. This balance requires careful planning and a willingness to make trade-offs. By keeping both perspectives in mind, organizations can ensure sustainable success. Next, we'll explore how to evaluate the impact of your allocation decision. Measuring the impact of resource allocation decisions is essential for continuous improvement. This involves tracking outcomes, comparing results to expectations, and learning from both successes and failures. Evaluation helps identify what's working and where adjustments are needed. By building a culture of measurement, organizations can refine their allocation strategies over time. Up next, we'll discuss the role of feedback in this process. Feedback from stakeholders, team members, and customers provides valuable insights into the effectiveness of resource allocation. Regularly soliciting and acting on feedback ensures that allocation strategies remain relevant and responsive to changing needs. This collaborative approach also builds trust and fosters a sense of ownership among all involved. Let's now look at how to manage risks in resource allocation. Every allocation decision carries some level of risk. Identifying potential risks early and developing mitigation strategies is key to protecting your resources. This might involve diversifying investments, setting contingency plans, or regularly reviewing risk factors. By proactively managing risks, organizations can avoid costly mistakes and stay on track toward their goals. Next, we'll discuss the importance of transparency in allocation. Transparency in resource allocation builds trust and accountability. Sharing information about how and why resources are allocated helps prevent misunderstandings and promotes fairness. Transparent processes also make it easier to spot and correct inefficiencies. By making allocation decisions visible, organizations can foster a culture of openness and continuous improvement. Let's move on to the role of data in allocation. Data-driven decision-making is at the core of effective resource allocation. By analyzing historical data, market trends, and performance metrics, organizations can make more informed choices about where to invest. Data also helps track progress and measure results, ensuring that resources are used efficiently. Embracing a data-driven culture leads to better outcomes and greater accountability. Next, we'll look at how to align allocation with organizational strategy. Resource allocation should always support your organization's strategic objectives. This means regularly reviewing your strategy and ensuring that allocation decisions are in sync with long-term goals. When resources are aligned with strategy, every project and initiative contributes to the bigger picture. This alignment also makes it easier to justify allocation decisions to stakeholders. Let's now discuss the importance of scenario planning. Scenario planning involves preparing for different possible futures by considering a range of outcomes and their impact on resource needs. This proactive approach helps organizations stay resilient in the face of uncertainty. By modeling various scenarios, you can test your allocation strategies and make adjustments before challenges arise. Scenario planning is a powerful tool for managing risk and ensuring long-term success. Next, we'll explore the role of continuous improvement. Resource allocation is not a set-it-and-forget-it process. Continuous improvement means regularly reviewing allocation decisions, learning from outcomes, and making necessary adjustments. This iterative approach helps organizations stay agile and responsive to new challenges and opportunities. By fostering a culture of learning, you can ensure that your allocation strategies remain effective over time. Let's now look at the importance of stakeholder engagement. Stakeholder engagement is crucial for successful resource allocation. Involving key stakeholders in the decision-making process ensures that diverse perspectives are considered and that allocation decisions have broad support. Regular communication and collaboration help build consensus and address concerns early. Engaged stakeholders are more likely to champion initiatives and contribute to their success. Next, we'll discuss the role of incentives in resource allocation. Incentives can motivate teams to use resources efficiently and achieve high-impact results. This might include performance bonuses, recognition programs, or opportunities for advancement. By linking incentives to resource allocation outcomes, organizations can encourage behaviors that support strategic goals. It's important to design incentives that are fair, transparent, and aligned with desired outcomes. Let's now explore the importance of organizational culture. Strong organizational culture supports effective resource allocation by promoting collaboration, accountability, and innovation. When employees share common values and understand the importance of resource stewardship, they're more likely to make decisions that benefit the organization as a whole. Leaders play a key role in shaping culture through their actions and communication. Next, we'll look at how to handle conflicts in resource allocation. Conflicts over resource allocation are common, especially when resources are limited. Addressing these conflicts constructively requires open communication, negotiation, and a focus on shared goals. Leaders should facilitate discussions, mediate disagreements, and ensure that decisions are made in the best interest of the organization. By managing conflicts effectively, you can maintain team cohesion and keep projects on track. Let's now discuss the importance of documentation. Documenting resource allocation decisions provides a clear record of how and why resources were distributed. This transparency supports accountability and makes it easier to review and adjust allocations as needed. Good documentation also helps onboard new team members and ensures continuity during leadership transitions. Up next, we'll explore the role of training in resource allocation. Training equips employees with the skills and knowledge needed to make effective allocation decisions. This includes understanding budgeting tools, project management techniques, and strategic planning. Ongoing training ensures that teams stay up to date with best practices and can adapt to new challenges. Investing in training is an investment in your organization's long-term success. Let's now discuss the importance of celebrating wins. Recognizing and celebrating successful resource allocation reinforces positive behaviors and motivates teams to keep striving for excellence. Celebrations can be as simple as a thank you note or as elaborate as a team event. The key is to acknowledge achievements and share success stories across the organization. This not only boosts morale but also encourages a culture of continuous improvement. Next, we'll look at how to learn from failure. Not every allocation decision will lead to success, and that's okay. The important thing is to learn from failures and use those lessons to improve future decisions. Encourage teams to analyze what went wrong, identify root causes, and share insights openly. This approach turns setbacks into opportunities for growth and innovation. Let's now discuss the importance of benchmarking. Benchmarking involves comparing your resource allocation practices and results to industry standards or best-in-class organizations. This process helps identify areas for improvement and set realistic performance targets. By learning from others, you can adopt proven strategies and avoid common pitfalls. Benchmarking is a valuable tool for driving continuous improvement. Next, we'll explore the role of innovation in allocation. Allocating resources to innovation is essential for staying competitive. This means setting aside time, money, and talent for experimentation and creative problem-solving. Encourage teams to propose new ideas and pilot projects even if they involve some risk. By supporting innovation, organizations can discover new opportunities and drive long-term growth. Let's now discuss the importance of sustainability in allocation. Sustainability should be a key consideration in resource allocation. This means investing in projects that deliver long-term value without depleting resources or harming the environment. Sustainable allocation supports organizational resilience and reputation. By balancing economic, social, and environmental factors, you can create lasting impact. Next, we'll look at the role of governance in allocation. Strong governance ensures that resource allocation decisions are made ethically and in line with organizational policies. Oversight bodies such as boards or committees review allocation plans and monitor outcomes. This structure promotes accountability and helps prevent misuse of resources. Good governance also supports transparency and stakeholder confidence. Let's now discuss the importance of scalability. Scalability means designing resource allocation strategies that can grow with your organization. This involves building flexible systems and processes that can handle increased demand without sacrificing efficiency. By planning for scalability, you ensure that your allocation strategies remain effective as your organization expands. Next, we'll explore the role of automation in resource allocation. Automation can streamline resource allocation by reducing manual tasks and minimizing errors. Automated tools help track budgets, assign tasks, and monitor progress in real time. This frees up human capital for more strategic work and improves overall efficiency. By embracing automation, organizations can stay agile and responsive. Let's now discuss the importance of ethical allocation. Ethical considerations should guide every resource allocation decision. This means treating all stakeholders fairly, avoiding conflicts of interest, and adhering to legal and regulatory standards. Ethical allocation builds trust and protects your organization's reputation. By making integrity a core value, you ensure that resources are used responsibly. Next, we'll look at the importance of reviewing allocation policies. Regularly reviewing resource allocation policies ensures that they remain relevant and effective. This process involves soliciting feedback, analyzing outcomes, and updating guidelines as needed. Policy reviews help organizations adapt to changing circumstances and incorporate best practices. By keeping policies up to date, you support consistent and fair allocation decisions. Let's now discuss the importance of cross-functional collaboration. Collaboration across departments is essential for effective resource allocation. Cross-functional teams bring diverse perspectives and expertise, leading to more informed decisions. Regular collaboration also helps break down silos and ensures that resources are allocated in a way that benefits the entire organization. By fostering a collaborative culture, you can drive innovation and efficiency. Next, we'll look at the role of external partnerships. External partnerships can enhance resource allocation by providing access to additional expertise, technology, or funding. Collaborating with other organizations, vendors, or industry groups can help fill resource gaps and accelerate progress. Successful partnerships are built on trust, clear communication, and shared goals. Let's now discuss the importance of adaptability in allocation strategy. Adaptability is crucial for keeping resource allocation strategies effective in a changing environment. This means being open to new ideas, learning from experience, and adjusting plans as needed. Organizations that adapt quickly are better positioned to seize opportunities and overcome challenges. By fostering a culture of adaptability, you ensure that your allocation strategies stay relevant. Next, we'll look at the importance of celebrating milestones. Celebrating milestones along the way helps maintain momentum and keeps teams motivated. Recognize progress at key points, whether it's completing a major project phase or reaching a financial target. Milestone celebrations provide an opportunity to reflect on achievements and set new goals. This practice reinforces a culture of success and continuous improvement. Finally, let's summarize the key takeaways from our journey. We've covered the essentials of resource allocation and capital budgeting, From setting clear objectives and prioritizing initiatives to leveraging technology and fostering a culture of continuous improvement, effective allocation of financial and human capital is the foundation of high-impact initiatives and long-term success. Remember to stay flexible, communicate openly, and always align your decisions with strategic goals. By applying these principles, you'll be well equipped to manage resources wisely and drive your organization forward.